Okay, before we get into the video, I'd just like to say I'm not a financial professional. Make sure to seek financial advice before placing any trades. Make sure you speak to an accountant or anyone you need to speak to, a professional, before you do anything with trading. And I'm doing this for entertainment purposes only. So today I'm going to be showing you an easy strategy in Forex. It's pretty simple as long as you stick to the rules and follow them. I'm going to go through everything step by step and tell you how to use the strategy when you're buying and selling. But if you are new to the channel, don't forget to subscribe, like, and comment, and drop your thoughts in the comment section. Okay, so we're going to get straight into this. So this is an easy strategy as long as you stick to the rules. I'm going to go through the rules in a second, but essentially it's a two indicator strategy. You're going to be using the 200 EMA and the 50 EMA together. So it's only two indicators that you need. It's a simple strategy for beginners. I'm not saying you're going to make a lot out of it, but it's going to help you on your way to financial freedom. So we're going to be using the 30-minute or the 15-minute time frames. I prefer using the 15-minute time frames. I find them better. I'm usually trading on higher time frames, but for this strategy, I feel like the 30 and 15 minutes work best, but 15 minutes a bit better because you have more information there. Whereas on the higher time frames, you see more in less candles. So we need to wait for a break in the price. So it's kind of like a break and retest, and we're aiming for a 1 to 2 or a 1 to 3 risk reward ratio. Now, risk reward is really important. If you don't know what risk reward is, you're basically risking one to make two back. So let's say we risk £20 or $20 and we're going to make £40 or $40 back. Same here, we risk 20, we're going to make 60. So you can lose two trades after making your 40 dollars right here, or you can or you can lose three trades after making your $60 right here. So it's pretty good having a good risk to reward ratio. This strategy is really good for that, and it is an easy strategy to follow. You just have to stick to the rules, which I'm going to go through, and it is a scalping strategy. You're not going to be placing a trade, waiting a few hours. It's going to take about an hour or two at the max. Sometimes it can take longer. You're not going to be waiting a few days anyway. It's not a holding strategy. You're just going to be scalping every now and again. If this is your sort of thing and you like scalping, or you just want to keep watching and learn how to use this strategy, keep watching because we're going to go through how to use this on a bearish market. So here are our rules. We have to stick to the rules. Do not deviate from the rules. So we're only using 30 minutes or 15-minute time frames. We're going to stick to 15 minutes for this video. We're only selling when the 50 EMA must always be below the 200 EMA when we're selling. Now, I'll go through each thing, but we need to wait for price action to break below the 50 EMA. So we've got the 50 EMA, the 200 EMA must be the 50 EMA must be below the 200 EMA, and the price action must break below the 50 EMA. Then the price must break above the 50 EMA, and we trade after a bearish candle. Now, it might sound confusing now. We're going to go through it in a second, but we're always aiming for a 1 to 2 at least, or a 1 to 3 risk reward ratio. Generally, 1 to 2 is easy enough to get, and then 1 to 3 is nice to get every now and again. So that's what we're going to be aiming for. Let's get straight into how to actually do this on a live chart. Okay, so we're on the charts now. I'm going to show you how the settings work. Before we start, I'm going to let you know we're on the GBP USD pair right here, and we are on the 15-minute time frame. Like I said, 15 or 30 minutes work best, but I'd stick to the 15 as you can see more candles and you have more information in front of your eyes. So if you don't know what this platform is called TradingView. If you are new to trading, you may not have heard of this, but this is a really good platform to use when you are marking up charts, as you've got loads of tools and indicators and loads of things on the side that you can use, and there's a lot of pairs and stuff on here. You can do a lot with this platform, so I recommend you use it if you don't know what it is. Anyway, getting into it, we're going to add some indicators. uh, the indicators we're adding are a 200 EMA and a 50 EMA. So you want to go up here, right here, and click on indicators. We are on GBP USD right here on the 15-minute chart. We're going to be looking for sells. So once you've clicked on the indicators, you want to go to the built-ins. You can search for it over here, or you can just search EMA, and it comes up right here. As you can see, a moving average exponential or exponential moving average. Let's add that in. We're going to add two of them in actually, because we need two of them. So click that twice, and then we're going to double click on this. We change this line color, make it thick, make it red and thick, not that thick though, make it that thick. and we're going to go here and we're going to write 200 on this. So the red one is our 200 moving average, exponential moving average. Let's double click on this other one. We're going to set this one to 50. So we're going to have one at 50, one at 200. You're not going to change anything else. We're going to keep this like it is, make it a little bit thicker, make it a little bit darker. Okay, so as you can see here, we've got the chart up with the 50 and the 200. The red one's 200, blue one's 50. So for cells, when we're looking for cells, we need the 200 exponential moving average to be above the 50, so the 50 must be below. You can see here, that is occurring right here, 200 is above, 50 is below. We need price action to be below the 50. You can see price is actually currently moving below the 50 exponential moving average. So we've got that, and then we need to wait for a break. Right here, you can see there was a break in the 50. You can see that this candle actually broke the 50 exponential moving average, and then we need to wait for it to break back down. As you can see right here, it actually did break back down, and so we would have entered our trade right here as soon as it broke through. You could have placed it up there or down here. So what we're going to be aiming for is a 15 pip, 10 to 15 pip stop loss with 15 pip stop loss right here, and we're going to aiming for a 1 to 2 ratio or a 1 to 3. So your first TP would be at 1 to 2, second TP would be at 1 to 3. Right here you can see it hit the 1 to 2. So let's say you traded with $100 of risk, you would have made $200 right there. So you can lose 2 trades now. That's why risk reward is really important. You could have also set your TP at 45 pips right here, which it does hit not too long after. And right here you can see it hits it over here, and we would have made $300, sorry, because that is a 1 to 3 risk reward ratio. If you had $1,000 risk, you would have made 3,000, exactly like that. Make sure you only ever risk 1% of your account though. We don't want to be risking more than 1% because we get into bad habits then. So that's one example. I'll show you another example of how it works. Now, before I get into that, I didn't mean to double click. What you can also do is another strategy is actually look for wick rejections and trade off of that. Right here, you can see there were a few wick rejections right here. We could have traded off of that and actually got a decent trade right here. However, I'll show you that in another video. Right here, we can see another example of this trade working out nicely. So right here, it is the price is below the 50, goes above, breaks above, then it breaks back down below right here. Would have placed our trade here actually, as it broke over here. Would have been a little bit of a drawdown. Would have aimed for a 15 pips stop loss right here. 15 pips. Goes in a bit of a drawdown, doesn't touch it. 30 pip take profit. Didn't mean to do that. 30 pip take profit, TP1 hit, then 45 pips right, TP2 hit. So that would have been a nice 1 to 3 ratio. As you can see right here, it's worked twice in a row. Wouldn't have traded this because it didn't break back below. But yeah, that's how you would do it for sells. It's pretty simple. You can also do it off of the wicks, like I said, as long as you see some wick rejections. I will explain those in another video. But it is pretty nice and simple. The way I look for it using this strategy is for a break and a retest. Just always make sure you're following the rules with the 200 EMA being above the 50, and then the price being below the 50 EMA, and then breaking out and retesting the level. So that's how we want to be doing it. So now we've seen how to sell. We're going to look for buys now. So again, once again, we're going to be using the 30 or 15-minute time frame. I'm going to show you on the 15 again, and we're going to be using the 50 EMA with the 200. So the 50 EMA this time must be above the 200 EMA. This should say buys. I guess this should be buys, not sells. So the 50 EMA must always be above the 200 EMA for buys. We wait for price action to break above the 50 EMA this time, and the price must break below. After breaking above, it must break below the 50 EMA, and we trade after a bullish candle. So it's literally the same thing, but the opposite. And once again, we're going to have a 1 to 2 ratio or a 1 to 3 risk reward ratio, because that is the best way to make money trading. Because if you have a 1 to 1, you're going to lose, and you lose 1 trade, you've lost your profits. Whereas if you're with a 1 to 2, you lose 2 trades and you're back to square one. So it's best to keep it like that. Anyway, let's get into it on the chart, and I'll show you what it looks like on the live chart. Okay, so we've got our 200 EMA right here, got our 50 right here. We're looking for 50 EMA to break above the 200. As you can see right here, the 50 EMA is above the 200 EMA right here. So that's been satisfied. We need the price to be above, and then to go below the line. As I said before, you can also do it off of rejections right here. You could have placed a trade just based off of the rejection, but we're going to use the other way, which is what I say. You wait for a break through the 50 EMA, which you can see here. It's broken through the 50, and then it's actually broken back. So we would have placed a trade right here for a long position. So we would have risked about 15 pips which is 1% of your account. You can do 10 pips if you want, around about 15 pips. And then we would, or you can aim for just above the candle so you have less of a stop loss. And you can even make more than, so if you generally aim for 30 pips right here, as you can see, hit it in a couple of hours. And then we could have also aimed for our 1 to 3 right here, which does happen. Um, you can also just put your stops just above, and this would have been almost a 1 to 4. As you can see, it works pretty well. Okay, so right here we can see another buy position forming as the 200 EMA is below the 50, and then the price action is above the 50 EMA. Right, we could have done a few trades based off of wick rejections and whatnot. But if you were using this strategy, you'd wait for a break. Right here, you can see a break. You could have done it there too, but this is easier to show you guys. It broke here and then it went back up. So we would have placed our buy position, our long position right here. After the candle closes, would have put a 15 pip stop loss right here. As you can see, it wasn't hit. Would have aimed for a nice 30 pips as a TP1 and then 45 pips as a TP2. As you can see right here, it was hit nicely. So this was a nice 1 to 3 risk reward ratio. As you can see, the strategy works pretty well. I'm not saying it works 100% of the time because no strategy works 100% of the time. It does have a nice risk to reward ratio as well. So you can win a couple of trades and then you can lose quite a few trades after that. If you were to go on a losing streak or a losing week, the strategy works pretty nicely. In my opinion, it is a great starter strategy if you are starting within Forex. You can use this strategy and implement it into your trading style, whatever you use, or you can just use this on its own. So if you guys did find that useful, don't forget to subscribe. Let me know if you're going to be using this strategy or if you already use the 200 to 50 EMA strategy and if you use it off of wick rejections. But yeah, don't forget to leave a subscribe, leave a like, leave a comment, and I hope you did find this useful. And I'll catch you guys in the next video. Thanks for watching.